mean, that was a big deal for you, getting retail investors involved in this. You did a YouTube presentation. You did, I think, a podcast with Vlad Tenev of Robinhood and got some allotment there. Why retail investors, and what's your sense of what demand is going to be like there?
Well, this is a very unusual, we took the body of a closed-end fund, but we looked nothing like other closed-end funds in terms of scale, in terms of governance, in terms of strategy, in terms of performance. The average equity closed-end fund over the last 8 years has generated a 7% return. We've generated a 25% return over the same period per annum. Right, so it's a very different kind of animal. Why now? Or your question?
Yeah, I mean, just why demand for retail? Why that?
Actually, that was the point I was trying to make, which is typical closed-end fund, 99% of the buyers are retail. It's really like a financial product that's sold to financial advisors and they put it in a client's portfolio. We did this like a traditional IPO. 80+% of the investors are actually institutions. Most of them family offices, pension funds, insurance companies, very sophisticated investors. None of them had ever before invested in a closed-end fund. So we took this structure, which is an amazing structure. I'd never looked at closed-end funds. What's unique about closed-end funds, you can buy minority stakes in companies. You can buy controlling stakes in companies. You can use derivatives to hedge risk. And there's only one layer of tax. Typical corporation, there's corporate tax, and then there's tax when you pay a dividend. So it's the most tax-efficient corporation, it's the most flexible corporation, but no one's ever used it for the purpose we're using it for.
Yeah, why do they tend to trade at a discount, closed-end funds?
Because they're passive collections of securities with fees. That should trade at a discount. But don't blame the closed-end fund industry don't blame the structure for the performance. And the analogy I would make, go back to the 1970s. A whole bunch of real estate investment trusts were launched. They all traded at discounts. Why? Because the sponsorship was weak, because the performance was weak, because the asset quality was poor. And then in the early 90s, I'm sure Carl will remember, Sam Zell took public one of the first multi-billion-dollar professionally managed real estate companies, and he chose to do it in a REIT. And people were like, Sam, why would I invest in a REIT? REITs trade at discounts. He said, no, not this one. And REITs traded at big premiums, particularly in the 90s, because lower cost capital in public markets, liquidity. And what does Sam have? He had best-in-class governance, he had best-in-class performance, he had best-in-class asset quality. That's what we're doing. We're kind of the rebirth of the closed-end investment company universe.
How do you feel about the amount you raised? I think $5 billion was about half of as much as you were aiming for, as much as $10 billion.
Aiming is not the right word. Okay. So we were giving, actually, it was a very unusual offering. All we talked about is Pershing Square USA. But as part of this, 2 years ago, we came to market. And what we heard from people is they liked the structure, they liked the governance, they liked the track record, they liked the sponsor. But they're like, why should I invest on the first day? It's just going to be a pile of cash. It's hard to get a pile of cash to trade up on the first day. Retail loved it. Financial advisors loved it. But the institutions you need to do a large-scale offering are used to an IPO that pops. It goes up 10, 15, 20% the first day. So that's when I scrapped it. I said, I'm going to come back with something better.
That was 24.
I was 24, and it's actually my wife's idea. I went home, I complained to her, it's going to be a $2 billion offering. I thought it could be 10. She said, well, is there something else you could give them? And I said, sweetheart, this is a really good idea. And so what we're doing is we're giving a piece of the GP, the management company, the entity that receives fees from the funds, and it's like a gift with purchase. And so for every 5 shares you buy PSUS in the IPO, you get 1 share of what we call Pershing Square Inc. So the IPO pop comes from the receipt of another security. It's almost like buying stock in an IPO, getting an immediate spin-off of another company. Once we had that, we were able to create an offering that was oversubscribed, which has never happened. There's no such thing as an oversubscribed closed-end fund offering, because they take every dollar of demand. In this case, we cut back the institutions very significantly in the offering. We let the retail investors get every dollar of, it's usually the retail gets cut massively back and the institutions are favored. We did the opposite. Now we picked the best-in-class institutions, but just to give you context, a $5 billion offering is the 6th largest IPO in the last decade. It's like the 20th largest IPO in American history.
So you're not disappointed?
And by the way, I asked the bankers, I said, when was the last time you worked on have you ever worked on a $5 billion plus offering? And only a couple of people out of a group of 60 have raised their hands. So
there's a lot of bigger ones coming, though, very soon, as you well know.
I mean, SpaceX could be a lot bigger, obviously.
Yeah.
But in this universe, permanent capital, this has never happened before. And, so I think it's a great thing obviously, we have some of the wealthiest investors in the world. We have a $200 billion family office that invested in this transaction. We have a pension fund that invested $500 million in this transaction. This was the $2.8 billion Cornerstone round is the largest amount of committed capital ever raised for an IPO. So we broke a lot of records here. And ultimately, at the end of the day, it's going to be about the performance long term. But this is a pretty
well. How do
compelling
you
story.
think it's